What are common mistakes US companies make when entering Canada? Expanding into Canada may feel straightforward, especially because of cultural similarities and shared economic ties. But US businesses frequently underestimate the differences between the two systems. As a result, many companies make avoidable mistakes that delay expansion, trigger compliance issues, or create unexpected tax obligations. Understanding these common pitfalls helps new entrants build a strong and compliant Canadian presence from the start. Misunderstanding tax obligations. The most common mistake is assuming that tax obligations arise only with physical presence. Many US companies believe, no office means no tax. Everything is remote, so nothing applies. We only sell online, so we're exempt. In Canada, GST HST rules, digital services requirements, and certain business activities create tax exposure even without a PE. Failing to register when required. Some companies begin operating in Canada months or years before realizing they were required to register for GST HST, register extra-provincially, file non-resident returns, withhold taxes on certain payments. This leads to penalties, missed filings, and costly retroactive corrections. Hiring Canadians incorrectly. Worker classification differs significantly between Canada and the US. A US company may hire a contractor, but Canada may classify the person as an employee, triggering payroll accounts, CPP and EI deductions. Provincial employment laws. Misclassification is one of the most common and expensive mistakes. Neglecting provincial differences. US companies often assume Canada operates like a single state. In reality, provinces control. Licensing, consumer protection, employment standards, corporate registration, sales tax in PST provinces. Failing to understand these differences leads to incomplete compliance. Ignoring legal differences in contracts. Canadian contract law has key differences, including limitations on liability, requirements for enforceability, consumer protection standards, privacy obligations, language requirements, especially in Quebec. Using US-style contracts without adaptation can leave businesses legally exposed. A practical example. A US professional services firm begins working with Canadian clients. It delivers remote consulting for months without issue. But when it sends consultants on site for training, it creates a business presence that requires GST HST registration and provincial registration. Because the firm was unaware, months of required filings were missed, leading to penalties that could have been avoided with proper planning. Final thoughts. The mistakes US companies make when entering Canada are rarely intentional. They arise from assuming similarity. Canada has its own tax rules, provincial regulations, and commercial standards. Understanding these differences early ensures a smoother expansion, fewer surprises, and stronger long-term success. If you'd like more insights delivered in the same straightforward style, you can explore our website. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.